In this video, we are going to walk through the most common loan types and their accompanying financing supplements. So, as you remember from the purchase contract discussion on the first page of the purchase contract, left-hand side, you had to check a loan type if your buyer was going to do financing. So whichever loan type you checked, conventional, FHA, VA, USDA, whatever the case may be, you must then have an accompanying financing supplement to attach to the contract to complete the packet. That is what these documents are. So if your buyer is using a conventional loan, then you would check conventional loan on the purchase contract and you would attach this form. The very first part, as in most of our contract documents, you're going to put the purchase contract at the very top of the contract. The next section here, you are going to, in this very first blank, put down the amount that your buyer will be financing. So for a conventional loan, they must put down at least 5%, but they can put down as much as they want. So just ask them how much they're putting down, or look at their pre-approval letter and see what it states that they're putting down, and make sure that you put that amount there. So this isn't the amount of the purchase price. This is the amount that they are getting their loan for, which at a minimum should be 5% less than the total purchase price of the home. The next section here defaults to 10 days, and that is the amount of time that they have to start getting their loan application completed and get through their loan processing. So we should keep that as is unless there are special circumstances that we would need to address that, either rush that or extend that out. The next section here, and the only reason I'm putting this out here, you're not going to write anything in here, but in section 2, it does talk about the appraised value, and it just simply states that there will be an appraisal done and that the purchase price or the contract price must match the appraisal value, or we must revisit the purchase price and renegotiate the contract, that the buyer is not obligated to purchase the home if it does not appraise for at least the agreed to contract price. Now, the only reason I point that out here is because when we look at the other financing supplements, there are some blanks that we have to fill in regarding appraisal value. In the conventional loan form, it defaults to the contract price. In the closing cost section, it simply states that the seller or the buyer, I'm sorry, is responsible for paying their loan costs, their origination fee, discount points, hazard insurance, flood insurance, their tax deposits and insurance deposits and interest that has occurred. Now, on the additional provisions, if you have a case where the buyer wants the seller to contribute towards the buyer's closing cost, then on the conventional loan form, you would need to write that into this open text field, and you would simply state seller to pay X amount of dollars towards the buyer's closing cost, prepaids, and escrows, period. That is all that you need to write there. And all that would do is, so say you wanted to ask the buyer to contribute the seller to contribute $5,000 towards the buyer's closing cost. Then your statement would say seller to pay $5,000 towards the buyer's closing cost, prepaids, and escrows. And what that will in fact do is charge the seller $5,000 and credit the buyer $5,000 to reduce the amount of money that the buyer has to bring to closing. So on the conventional loan form, it is simply one page, very straightforward. We write the amount to be financed at the top. It already addresses the appraisal value. It already addresses closing costs. And if you want to ask for closing costs, you must write it into the additional provisions. The buyer signs at the bottom and the seller signs at the bottom if they're accepting the contract as is. Now we're going to move on to the FHA loan. So that one was for conventional. If your buyer is doing an FHA loan, this is similar, but there are some differences that I want to walk through. So again, very top, property address. At the top of the form, section 1, again, amount to be financed goes into this first blank. Now on an FHA loan, the minimum down payment is 3.5% instead of the 5% for the conventional. So again, go back to your buyer, find out how much they're putting down, or reference their approval letter to see what their lender has approved them for. And you are going to write that amount there for how much they will be financing, not the purchase price, but the amount that they are financing. So the purchase price minus their down payment. Down payment on FHA is a minimum of 3.5% of the purchase price. Again, we've got the default of 10 days. We can leave that be unless there are extenuating circumstances. Now we're going to get down to section 2. As we talked about in the conventional form, it already defaulted that if the house didn't appraise for contract price, that the buyer and seller could renegotiate, or the buyer was not obligated to proceed with the purchase. In the FHA financing supplement, it in fact says the same thing, but you must write in the purchase price of the contract in that blank there in section 2. So this is the exact purchase price from the contract. Okay, so not the amount they're financing, but the actual purchase price that they are paying for the home. And that's what will go in this section 2 of the contract. And the house must appraise for the purchase price in order for them to proceed with the contract. And if it doesn't appraise, then we must renegotiate that contract or address the buyer bringing additional funds to the closing. Okay, now we're going to go to section B. I'm sorry, this is section 3B, and this is a little bit different. So as you remember from the conventional loan, there was not a section that specifically called out closing costs and the seller paying any closing costs on behalf of the buyer in the conventional form. In the FHA form, it is addressed in section 3B. So if nothing is written in section 3B, then it is assumed that the buyer is paying all of their own closing costs and the seller is paying all of their own closing costs. So if the buyer needs or wants the seller to contribute to any of the buyer's closing costs, then that needs to be added in section 3B. Now, you will need to check with your lender on whether or not they have any unallowable costs. And that is typically, if they do, it would be around $100. And so you would check with the lender that they're using and ask them, what are your FHA unallowable costs? And they will give you that number. And that will go into 3B1. For 3B2, if the buyer does not need the seller to pay their closing costs, you simply leave it blank. If the buyer wants or needs the seller to contribute to their closing costs, then you will add that amount there. So in this case, let's say that the total closing costs that they need covered are $5,000, and the lender said that the unallowable costs that they have are $100, then we would simply write under 3B1 100 in the first line, and then on 3B2, we would write 4,900, which would total $5,000 that the seller would pay towards the buyer's closing costs. And then if there is anything else that needs to be addressed, we can write that in additional provisions. But since the appraisal is addressed above and the closing costs are addressed above, there's typically not much that you see in additional provisions on the FHA financing supplement. Now here, you're going to have the buyer sign here and the seller sign here in this top section. Underneath, you're also going to see the FHA real estate certification. And the buyer and seller need to sign this bottom section no matter what, if there's a counter offer or not. And so they're just certifying that it says here, we, the buyer, seller, listing agent, and brokers involved in the transaction certify that the terms and conditions of the sale of contract are, to our knowledge, the entire agreement between all parties, and that any other agreements, counteroffers, and addendums entered by any of those parties in connection with this transaction are attached to this contract. So it's just stating that we are disclosing that there are no other agreements outside of everything that we have provided. And so that we just sign that at the bottom, and both buying agent, listing agent, buyers and sellers must sign this bottom no matter what, even if there is a counter offer. Okay, so that is the extent of the FHA financing supplement. The next one is the VA financing supplement. VA is a lot more similar to the FHA one. So at the very top, you write in the property address. Again, here, amount to be financed. Now, the benefit to the VA loan is that there is no down payment requirement. They can finance 100% of the purchase price. They don't have to finance 100%, but they can. So you will talk with the buyer, talk with the lender, find out how much, if anything, they are putting down, and put that amount there as far as the amount that they are financing when purchasing this home. The next section, again, very similar. It defaults to 10 days. Unless we need to change that for some reason, we can keep that at the default 10 days. And now we're down here. And this here talks about the allowable and unallowable costs for financing. So this top part, regarding the buyer's loan cost reference above, the buyer's closing costs, the seller agrees to pay on behalf of the buyer. So very similar to the FHA. And that is where, again, you would write how much you want the seller to pay on behalf of the buyer. It doesn't have to be anything at all. In today's market, with it being as aggressive as it is, we're not seeing the sellers pay anything towards the buyer's closing costs. But as the market shifts, that can change, and we can start seeing that come back into play. So if you want to ask the seller to pay for closing costs, that would go there. Again, we'll go back to the lender, ask the lender if they have any unallowable closing costs, and that would go into section 4 of the VA prohibited buyer costs. And you would ask the lender if they have any unallowable VA closing costs, and if they do, you would put that amount there because that must be paid for by the seller. So again, hypothetical situation that you talk with your buyers, they want the sellers to contribute, in this case, let's say $3,000, and the unallowable costs from the lender are $200. So what we would do in section 3B, we would write $2,800 in that blank. And then in section 4, we would write $200. Now, in section 5, it simply states that the house must appraise for contract value. And if it doesn't appraise for contract value, we can either renegotiate terms or the buyer has the right to not purchase the property. So again, you see common threads between all of these documents with slight variations between them. Again, at the bottom of this one, the buyer and the seller will sign as long as there's not a counter offer. And then the very last one we're going to cover is the USDA loan. So these are more rural properties and very simple form as well. Again, falls in line with all of the other ones we covered. Property address is at the very top. Up here where amount to be financed. Now with USDA, they do allow, because it's a special rural housing loan, 100% financing. So again, they don't have to finance 100%, but they can. So as we previously stated, get with the buyer, find out how much, if any, they're putting down, and write the amount that they're financing in that spot. So if they're buying a house and the contract price is $150,000 and they are going to do a USDA loan and not put anything down, then your amount that you're going to put in that first blank is going to be $150,000. Again, in here, this one is very much like the conventional loan form, and everything is defaulted. There's no unallowable costs like the FHA and VA forms. So we simply say, you know, they must make application and start the lending process, must make application within 5 days and start working on their loan and getting everything reviewed and submitted within the 10 days. This talks about the appraisal value. So again, in all of these, anytime you're obtaining the financing, the house must meet appraised value unless otherwise agreed to and documented how that appraisal gap will be covered. And then again, it talks about closing costs, that these are the closing costs that are the responsibility of the buyer. So this one is going to be exactly like the conventional one that we did first. There isn't a place to specifically write in a number if you want the buyer to ask the seller to cover closing costs. So we have to write in the verbiage, seller to pay X amount towards the buyer's closing cost, prepaids, and escrows. So simply find out if they want the seller to contribute anything at all. If they don't, simply leave additional provisions blank. And if they do, figure out what that amount is and write that in there using the statement seller to pay blank amount towards buyer's closing costs, prepaids, and escrows. And then we have the seller sign at the bottom and the buyer sign at the bottom, as long as we're accepting it as written. And that is the financing supplement attachment to the purchase contract. Again, you pick which one aligns with the financing type that your buyer is using, and that must align with the checkbox that you checked on page 1 of the purchase contract in order to complete the offer packet.